The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Stephen and Peter. All right, lads.
Yes, hello, yes.
Steve's in the background, I'm Rick Curry. Where's Paddy? He's a bit quiet on the SAP group, isn't he? SAP, man.
Yeah, what's SAP? Never know. Never know with Paddy. He could be at 37,000 feet, or he could be
at a political rally for the Socialist Party.
He's probably at one of those conservative conferences, and he loves them.
Yeah.
Yeah.
Equal pay, no more work, some of that. Down with the Tories, F the Tories. Yeah, it's basically a march where it says F the Tories. That's it. F the Tories. What are you standing for? That's it. That's all we stand for. F the Tories. There we are. We're in recession. Why? And officially, well, not officially, but it's quite obvious, isn't it? Do you sense it, boys? The recession creeping onto us. The doom and gloom. Do you know what's nuts? It is crazy how the mainstream media go on about the recession. It looks like we're heading into a recession, like it's a deep, dark tunnel where there's lack of oxygen and no light. You know? It's like most people will not notice it. Most people carry on with their daily... People will notice inflation, yes, but they won't notice a 0.1% or 2% contraction in the gross domestic product of the UK. They won't notice.
I noticed it today.
Did you? Yeah. You notice the gloom creeping in slowly. Like, you know, you're walking on the street and go... Boom, 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 oh, here comes the recession. It's like I remember Sean Locke once saying on a game show. It was quite funny. I thought it was like so. It was a March time, or no, just after the Q2 it was. And he said, "Do you see the recession?"
He said, before he died.
Yes, before he died, of course. Yeah.
Okay, cool.
Even though he is funny beyond the grave, you should check out his YouTube videos. But it was like he said, I don't know if you saw the GDP figures. He said. Up 0.1% last quarter. He said, got me thinking, if I hadn't bought that Mars bar last week, I think we could have been in recession. and that's it. It's not that sensitive. We're talking about trillions of dollars, the economy, you know, and people generally won't notice it, you know. It's like, and it looks like we are headed into recession. Strap in, guys! It's like a ghost train, you know. It's not going to happen. Most people will not notice it at all. But
like you said, they'll notice the rise in prices and everything else, won't they? That's associated with the recession. So they'll notice the byproduct of the recession.
The thing is, but inflation, you see, is self-correcting, isn't it? Thanks, Steve. Steve, put your cutlery down a bit softer, yeah?
Sorry.
In the background. And what are you using, Steve? A fork and knife? Where's my fork and knife? Where's my fork and knife? So what are you using? A fork and a spoon?
A fork, yeah. I've just finished it, actually, so we're all good. Although I have got some pompadums. I think they're a bit noisy.
Pompadums? What the hell are pompadums? They're pom-poms, purry. What are they?
Pompadums? Is that what you call them?
Pompadums? Pompadums.
Anyway, back to the recession.
Sorry, how old are you, Steve, now? How old are you? Stephen. When I say Stephen,
he can't even answer that.
He's counting his fingers. I'll be
with you in a sec.
I was 30. I'm running off fingers, to be honest, I think.
38.
Yeah. He's using his toes. He's using his toes now. He's checking the packets. He's checking the packet. Hang on, what are they called? Pompadums. There's no M in them, Steve. It's not poppadoms.
This is an M at the end. Anyway, right. Back to it.
Okay.
Well, I mean, like, the prices aren't, the byproduct of recession, they're almost the cause of the recession, aren't they? Because in terms of, like, inflation going up and everyone's felt the rise in prices, and then the contraction of the economy is a byproduct of that.
Exactly. Well, no, the thing is, the interest rates as well, you see. We're squeezing from both ends here. It's literally getting squeezed from both ends. Inflation is pretty much self-correcting. A little bit of inflation is good, you know, because it makes people spend. Because you think, wow, I better buy that, fridge freezer now because next year it'll be like, 20 quid more expensive. Now, if you've got deflation, that's really worrying because people don't spend anything. Now, that's what can happen if you overcorrect. That's the Bank of England, and I think they are. Central banks, I mean, they're saying now, into 2023, towards the end of the year, we'll probably see peak. It's big rally day last 2 days in the US because of inflation came down more than expected. They were expecting 8.1% year on year, came in at 7.7%. The markets have rallied like crazy. It's like when we go back a year to January when they announced 7.7% inflation, the markets tanked and everyone was scared and screaming like, heading over a roller coaster, the top part of a roller coaster. And now it's come down to 7.7. People, yay, all right. It's still 7.7, but the direction of travel is different. So, what's going to happen is, we're going to see, hopefully now, with peak inflation is probably behind us, which is a good thing. And now we just need peak interest rates, which is going to happen by March, probably. Now, the Fed has said that they're going to probably do 0.5 percentage point next time, rather than 3/4 or 1, and then down to 0.25%. So the incremental increase is going to get less. So that's why the market's rallied. But make no bones about it. There's going to be a difficult time ahead for many businesses who, higher interest rates on debt. It costs a lot more money to raise money, to hold money, to have debt. Also, input costs are expensive. But inflation largely is a bit like salt, when you think of it, right? So you need a bit of inflation to get the economy going. But like salt on food, it's good, but you put too much on, you'll start thinking, that's horrible, actually, put too much salt on there. But, there's a certain level, isn't there? A certain level where it doesn't get nice anymore. And that's what they're saying with inflation. After a while, it starts biting, and people start saying, I'm not going to spend. It's too expensive. So that it was self-corrected, but taking longer. But, then all of a sudden you've got the central bank's choppy legs from underneath you, raising interest rates as well. So calm down. So yeah, it's gonna. A bit worrying. I think it's going to overcorrect. I think you'll start finding probably the inflation dropping very quickly and unemployment going up. So that's the worry. That's the worry, really. Do you see any boys? You're in working in real jobs in the real world. Do you see any effects from this whatsoever? Steve did say he sensed the recession creeping on today. Are you getting any of that from your jobs? Are you sensing people, cutting back on certain things and where you are, what you're doing? People you talk to, maybe people you just generally chat to, have conversations with every day. It doesn't have to be your colleagues, but or your business, but anyone. Are you sensing any sort of slowdown?
From my line of work, I've not had anything, if anything, because I put my prices up recent, and everyone's fine with that. So
but the sex industry, Steve, is very recession-proof. Yeah. When you make this film,
always buoyant.
There's always consumers for those films you make. There really is. And so what? So you put your prices up, and there's been no reaction from your clients, is there?
No, not at all.
He's still got no work.
I haven't got any clients anymore.
No change whatsoever. I still haven't got any jobs on. I'm going to keep putting the prices up, see what happens. That's a good one.
It's good strategy, Steve.
There we are. What about you, Peter?
A little bit, but nothing major. But people are conscious of costs, and we work in obviously digital marketing and an agency, so we're selling our services. And there's a little bit of cautiousness, and marketing's always the thing that they'll pull their purse strings in on first potentially. So there's a little bit, but nothing too major at the moment. And I don't know. We'll just have to see how it pans out in the next 12, 24 months. But I don't know. Nothing major at the moment.
Yeah, it's an odd. Well, if we are in recession, like I said, do you know what? It's the Q3 GDP, which of course we all know what that is, don't we? I mean, there's good news and bad news here, really, for the markets and thing. What do you want first, the good news or the bad news?
Bad news.
Bad news.
Bad news. Okay. So the bad news is Q3 contracted. Okay, let me just check it. I think it was 0.2% contraction. Just check that a second. So that's the bad news. Scroll down. Okay, yeah. So Q3, 0.2%. And the first month of Q4, which is October, of course, contracted by 0.6%. So that's a big drop, So that's the first month of Q4. So we're going to need some amazing growth in November and December not to go into recession, because the recession, of course, is 2 quarters of contraction. Now, we've already had Q3 contracted. Will Q4 contract? There's a good chance, of high probability it will contract, because the first month is already down 0.6%. So the good news is this. Markets, and this is data going back many, many, many years through many recessions, markets perform worse 6 months and 12 months before a recession. So we're even better, and markets perform better during a recession than before a recession. So if you realise, hang on, so this sell-off we've had, this horrible bear market we've had from September 2021, the AIM index specifically, the reason why it's performed so badly is because it's been before a recession. Now we are pretty much in a recession. So I don't think we're going to see, and that's the good news, by the way. So I don't think we're going to see any more of a big fall-off. And in fact, if you look at some of the markets rallying today, some of the stocks have been hit, and I did tweet, some of the stocks, if you want a sort of a guide as to where the markets are, first of all, the dollar's dropping, which is very good for everything, because if the dollar's strong, it exports inflation essentially, because most goods, most commodities are priced in dollars. So if you don't, if you're not in America, it's going to cost you a lot of money. But also stocks like, for example, Boohoo, online retailer, the darling of the stock market, it has lost 90.5% of its value from 24 months ago. 90.5%. That's nuts, isn't it? Like, do you remember when even COVID, we thought, well, let's get into Boohoo now. It's at £2 or £4 or that. And now it's like literally it went out to 35 pence. So people think it's going to go bust. But it's also now up 55% from its low in October. So it's gone from 35 pence to 54 pence, something like that. Now that's been 602 days from its high to low. But when you start to get rallies from stocks like that, they've been hammered so hard, and they start to rally. That's a good sign. The bottom is in. And even AIM, the all-share index, which is all, the growing companies pretty much, there's a lot of crap in AIM, though. There's a lot of people just digging dirt in Africa. Throw it in.
Can I throw in a curveball? I hear what you're saying. I agree. But what about then external factors, nothing to do with recession? I mean, like we saw with Putin walking into Ukraine, the obvious other one is China, invading Taiwan, something like that, a major global event like that. And that's not, it's not unreasonable to sort of think that could happen. I read a thing the other day. It was saying like the markets would just plummet because, of course, they would, because of like the shipping of the goods and everything that's coming out of China. The shipping area around there would all be disrupted by effectively a war. The UN and everybody else was getting involved. I mean, it will get very, very messy if that was to happen. And obviously, let's hope it doesn't, and hope that never happens. But it's talked about. It could be imminent. It could be happening in the next year, 2 years, whatever. And you start to think, how do you shelter yourself against something like that? Because as with Putin and Russia and the invasion of Ukraine, that came, well, to me, relatively as a surprise. And I was caught on the hop. But
then at the same time, Pete, do you not think by them doing this and them now pretty much failing in the war, do you think that's not giving them a message like to China going, not so much failing.
Good point, Stephen.
It's more to do with the sanctions and stuff, knowing that actually, and I think didn't Biden already say if they invade Taiwan that the US is literally going to defend them, isn't he? Yeah. So they're not going to want that, are they?
No. Who knows? But you know what I'm saying? It's like an unprecedented event like that, and that you think, you should be, or we should be kind of aware of all of those sort of things that potentially could really impact, like we've seen in the past 12 months.
Yeah, but look at where China is at the moment, right? China are really seriously, their GDP is dropping off a cliff. And I mean, normally, I don't know what it is at the moment, but normally they're aiming for around 6%, right? And they're down at, like some say, less than half of that, largely due to this, COVID policy, zero COVID policy. No sniffles in China. If there's a sniffle, we lock down the entire city. It's a bit extreme, that, isn't it? Yeah. In fact, a bit more good news. I was listening to Radio 4 on the way back from Winchester to now, from taking Fred basketball. COVID cases in the UK are now dropping. We've had a peak COVID already. Autumn was the peak. So that's good. People were worried about a flu, COVID. So that's one worry. You can put it in your back pocket and sit in it. So that's, they're worried about a flu COVID combo, which would fill up the hospitals. Seems like it's not going to happen. So COVID's dropping off. So that's good. But China at the moment, China's under a lot of pressure, growth-wise. They're not performing. And when you've got sort of 1.8 billion people who need work, and there's I think now he's been very strong on the politics. He needs to get kicked back into growth. So, I don't see them. And I do believe what Steve says there, and Russia keeps saying it now. That's their excuse for losing. Yeah. They say, we're not fighting Ukraine, we're fighting NATO, And where's all his nuclear weapons, all that? He's threatened for so long to chuck a nuclear weapon. Come on then, Putin. Come on, show us your nuclears. Get them out.
Maybe not.
No, but he won't do it. He lives like a billionaire. He won't do it. Why threaten the entire his billionaire existence? He's one of the richest guys in the world. He's not going to threaten his cushy. He loses big tables and all that stuff. He loves those things.
Yeah. But there's a chance, and you sort of think, I'm sort of naively walking into it, not really thinking about it, not thinking, I should, put some cash to one side. I should put some under the mattress, or
Yeah, but do you know what? Though? Do you know what? Yeah, but listen, this is the way we think in a bear market. We're like risk averse. Yeah. It's like, I keep saying this, people focus on the risk a lot more at the bottom of the market, when in actual fact there's less risk there because valuations are lower. And so if companies have to, achieve a certain amount of earnings, they're likely to do it because it's been, especially on AIM, many companies have been oversold. They're way below their reasonable value. And so investing here for a long term is a good play, as long as they're good companies and they're generating. But also, look at your exposure to China. How is it going to affect? Let's be honest. Look at the stocks you own right there now. Okay, your portfolio. Mm-hmm. Your portfolio. How would it affect your portfolio if China, went into Taiwan? Would it affect people going to boom battle bars or escape rooms?
Yes.
Exactly, wouldn't it? I mean, what else do you own? So would it affect bring some Trufin and their, invoice lending via Lloyds in UK? No, because most of the companies that I own, and you probably, E-Energy, do you know what? I've said this many times, it's hard to know where we are. We look like we're close to a bottom here. But it's still going to be difficult for companies over the next 6 to 12 months, especially companies who are, consumer-facing, and also a lot of their sort of sales or services are targeted at low-income families who are going to suffer. So the best thing you can do is get good companies that are not targeting that area or going to be affected over the next 6 to 12 months, because the economy lags the markets. When the market's going to price stuff in, they will. And we've seen that being quite bloody efficient. The market started to pricing this in way before it's actually happened. Like I said, the high of AIM, September 2021. That was like, wow, how clever is the market, eh?
And just when talking about the exposure, it's not. I haven't got direct exposure, but you start to think of supply chain. You start to think, China is the factory. No. But you think of China and it's the factory of the world, isn't it? And so it's producing stuff, and who knows then the sanctions that we impose and whatever. And like I said earlier, the actual transporting of the goods and all that stuff because of that area around Taiwan.
That's happened though. That's happened. It
would be impacted, wouldn't it? So every business will be impacted almost.
Yeah, but we've had a supply chain crunch because of their zero COVID policy. Now, I don't believe they'll go. Hang on a second. Wait. I don't believe they'll go to war, right, with zero COVID. So their factories will open back up. They'll have to start producing sort of weapons and military anyway. So right now, this inflation we're experiencing is down to sort of 2 or 3 things really. But one is down to QE, quantitative easing, pumping money into the system, lowering interest rates, making money very cheap. Everything sort of, there's nowhere else to put your money. You can't put in a savings account, there's no point. All the assets going up. Banks got loads of money because the Bank of England have bought bonds off them. So they put their money in the stock market. At the same time, interest rates have gone down. There's no other place to put your money. So stock market was it. That's why we had a 10-year bull run pretty much. Plus, on top of that, then you had Ukraine, and then you had COVID as well, which messed up all supply chains because China's ridiculous zero COVID policy. They locked down cities if someone's got a sniffle. Did you sniff then? Lock it down, guy. Lock it down. Rock it down. Rock it down. Rock it down. And so it's just crazy. So I don't think the supply chains are getting any worse. In fact, they're easing up now, and China's suffering. Okay. Well, they are slowly easing up. It fixes.
No, but I'm talking about a war situation.
Who cares? And also,
I'm doom mongering, but I
know. But listen a sec. But also, I think there'll be no bigger war and disruption than the Ukraine war, right in the centre of Europe. I know it's a Far East, Taiwan, and China. I know, but I think it's more disruptive in the centre of Europe than most people won't care about the war in Taiwan.
Okay, I suppose on a more general point, what I'm saying is I don't think I'm very well sheltered or protected from unprecedented events. I still haven't learned that lesson. I think I should have learned this lesson from what's happening with Russia and Ukraine and the energy crisis and the cost of living crisis. I didn't really. You can't prepare for that. You can't prepare for the unknown.
And also, it's too late for that now. It's fine.
It will happen again. Other things will happen. Is what I'm saying.
Yes, they always have. I mean, listen. The stock market's pretty much been around for several hundred years. Okay, we've gone through so many, world wars, all that stuff. It's always gone up. It's always gone up over the long term, and that's it. You've got to be in it for the long term, so you can't predict in the short term vagaries. Like I said, that's Ukraine war now. It started in February. It seems like a lot longer than that, but it started in February. It's they're on the back foot in Russia. Their weapons are crap. Everything you've got to go. The people they've mobilised have got to bring their own sleeping bags and stuff and boots and all that stuff on their arse.
And they are bring their own tank. Bring your own tank.
Yeah, bring your own tank.
I find it amazing the amount of weapons they left and missiles they left in Kherson, which. Because considering they've had weeks of where they're saying they're like getting everyone out, and I'm like, they left all their weapons. You're like, what are you doing?
I didn't know about this, Steve. Tell us about this. I didn't know they left a lot of stuff there. What was it?
That's pretty much the story. There's not much more to tell. Right?
Okay, but where did you get this information from, Steve? Because I've been watching. I've been reading the news and all that stuff. I've seen. In fact, 2 days ago there was rumoured they'd taken Curzon, but there's no actual confirmation.
Today they've actually taken it today, so they got footage now of these soldiers and like TV crews in there, and they're going into the bunkers. And there's like this one warehouse just full of missiles and things like you can. A lot of them as well. Like you think they're probably they're quite valuable to them considering they're supposed to be running out of weapons. But there you go.
But have you seen the amount of military, according to the defence of Ukraine, 1.6 million? Let me just scroll down. They've often put graphics up of how much they believe the Russians have lost. And I don't see they've got much left, to be honest. It's like, and you realise that, where the morale is so low. They're saying here, right, so far, 79,400 troops eliminated, personnel, 2,814 tanks, 5,900 armoured combat vehicles, 1,800 of artillery, long-range things, 400 multiple launch rocket systems, and it carries on, 278 military jets, 261 helicopters, 1,500 drones. It's like 4,259 vehicles and fuel tanks. So it's like, I understand there's a military of 200,000 or something, but when you take out, now I assume they'd put their best equipment initially into the war. So all that's gone, pretty much. They're struggling, aren't they? So short of a nuclear bomb, I don't know what they're going to do. But I don't think Putin wants to do that, because even though that's the end, tide of opinion is slowly changing against them in Russia. So you wouldn't want to do that. So, but things like that you can't plan for. Of course you can't. But do you know what's amazing, though? Is literally, if you look at, and I did a video on this, on the 50-day moving average and 200-day moving, if you stick to that, and going forward I will stick to that, I've got the discipline now. I said, if I stuck to this, I did an updated sort of structure on my webinar, and I will, for always now, look at companies that are trending up. Buying stocks that are trending up, and that means 50-day moving average above the 200-day moving average, is a proven way of doing it. So get all the fundamentals right, yes, and then don't just go into the company, wait until the share price is trending up. Because why people only buy, or people tend to buy more rising stocks. They don't want to buy falling stocks. So buying begets buying, selling begets selling. So even though you can buy a company that's looking good fundamentally, it's growing, there's a disconnect between that, the fundamentals, and the share price. So if you only buy trending stocks, and even on, I did a video on the that 15-minute video. Thanks, Steve. I never go on Facebook, ever. And I went on Facebook like a couple of days ago. I don't know why. I don't know what I was looking for. But I did see Steve had shared my video, 15 minutes, learning about investing. And I talked about the S&P 500. But a follow-on video from that is the moving averages of the S&P 500. And literally, if you just followed that, and it's all about some discipline, I suppose. But if you stuck to that, you'd have been out now on most stocks. In fact, look at all our stocks, right? Look at all our stocks and just put a 50-day moving average. On the S&P, for example, you'd have been out now at 4,200, and it dropped down to 3,400 pretty much. It's now bounced a bit. We're here at 4,000 now. But you'd have got in the S&P, right, after the COVID dash for cash crash. You'd have got in at 33,000 pretty much, and got to 4,200, which for an indices, that's a big gain, you know?
Yeah,
now, if you look at our individual stocks, same, pretty much the same. If you'd have got in...
You're saying when the average is turning over, you get out?
Yeah, so when you turn over, for example, look at XP Factory, right? In fact, it's coming back now. It's not far, a little bit of a rally. We're not far back from actually crossing back up into a new trend upwards. But if you'd bought when it crossed initially, you'd have bought it as 8 pence, right? And then that would have been back in November 20. You'd have sold at 32 pence in October 2021. And we know since then, pretty much the bear market kicked in, went down, right? And now the 50-day moving average is below the 200-day moving average. The 50-day moving average is at 15.5 pence. The 200-day is at 21. And the 50 days moving up very quickly. So we're not far off being back in an uptrend now, which is very good. And that'll go, I think, now way above previous high. So, but yeah, if you just paid attention to these, you know, the trends. And I read an article about a guy who wrote a long lot of essays on it saying, essentially, there's many reasons for it, but it's more of a buying power, isn't it? You know, people buy shares that are rising. Yeah, and in fact, there's a guy called William O'Neill. One of the first books I've ever read is Making Money in Stocks. He's brilliant. William O'Neill, and he had an acronym called CANSLIM. And I think I've improved that acronym in my sort of, I think, called investors. Mine is called my acronym. But CANSLIM is about buying companies hitting 52-week highs. And you think, why would you want to do that? Because people want to buy the lows, sell high, you think, right? But he only ever buys 52-week highs that are companies that are improving their earnings per share. He said these companies, the reason why they're at 52-week highs, is because they're fundamentally improving, and they generally go on to improve even further. So only ever buy strength. And it's true. Momentum. So I've added momentum. In fact, momentum charts have always been on my filter, but I've moved it up as a necessary filter now. I will look at momentum. So you've got growth is the most important thing amongst small caps. Then you've got value, and then you've got cash generation. Are they profitable at an operating level? And then fourthly, after all that, are they then in an uptrend? And I've even managed to do this and put it on a spreadsheet, so it'll give you indicators whether it's whether the share price is above the 200-day moving average and whether the 50-day moving average is above the 200-day moving average. But even if you pay attention to that, and all you need is discipline. It's very hard not to. Yeah, I've been looking at Boohoo this week, and it's rallied a little bit, but it's nowhere near that uptrend. It's rallied and come back, rallied and come back. And I probably won't get into it because fundamentally at the moment it's making a loss, which is crazy.
Yeah.
But it's interesting just watching the chart. And people say, have we seen the bottom yet? And I said, it's hard to say. But if you really want confirmation, just look at the 50-day and 200-day moving average. Right? You won't catch the bottom. No, you won't, because it'll have to rally quite a bit. But you don't need the bottom. And in fact, trying to bottom pick, trying to pick the bottom, trying to pick the bottom is where you come unstuck. Because generally you get loads of fake rallies, and it'll go down again. And in fact, the Nasdaq yesterday, I don't know if you saw that. Toosh, did you see that yesterday? Stephen, Peter, did you see it?
It was incredible, wasn't it?
It was fun.
Yeah, it was unbelievable.
Unbelievable bloody bull.
Unbelievable.
Incredible. It went
blew my pants off.
The Nasdaq.
Talk us through it, Steve.
I'll let Justin explain. He says it much more.
You go on, Steve. Just give us a summary, Steve. Just give us a summary, Steve.
It was a good day for it, yeah.
Yep, that's right. Well, yesterday, right, the Nasdaq went up 7.35%. That's an index now. That's the biggest tech companies. These are big companies, you know. It went up by 7 points. You wouldn't mind your shares going up by that in a day. This is an index of 100 biggest tech companies, you know. And so people say, oh, that's the bottom. Now, why did that happen? Because of the CPI figure. The inflation figure came in better than expected, lower, 7.7% year on year versus 8.1% forecast or expected. And people say, oh, this has got to be the bottom. This has got to be the bottom, surely. But is it? We know the best rallies, daily and weekly rallies, happen in bear markets, you know, so there's no guarantee it is the bottom. And if you look at this stat, where is it? Yesterday, 7.4% gain on the Nasdaq puts it in the top 20 days going back to 1971 of those largest moves. And it's of those largest moves, right, out of the 20 biggest moves, 16 were in bear markets. So what does that say to you?
What?
Were you listening? You've got to listen to them. So the Nasdaq. I'll repeat. Yeah, what is it? What does that say? So yesterday, Nasdaq did 7.4% gain, right? and thinking, we're back in the bull market, maybe. That's at the bottom. So 7.4%. Now, that puts it in the top 20 days of gains since 1971. So the biggest moves they've ever had. Top 20. Yeah. Now, of those 20 biggest moves they've ever had since 1971, 16 of those were in a bear market.
So it says we're in a bear market.
Exactly. You only get these kind of technical, aggressive bounces when an index has been oversold and people realise it's been oversold. You get some positive news come in, and all of a sudden that it's been suppressed for a while, like coil spring, and it booms up. But doesn't mean it'll go higher, over the medium term or over the next couple of months or weeks or whatever. So it's likely it'll come back to where it was. But even today now, so today it was up 7.4% yesterday. And this is the trouble is, people start buying, especially in America. You got these algorithms, algorithm, and they basically buy on certain indicators. And one of the indicators was CPI. Apparently, they just buy in like crazy, became below expectations, and so this pushes the market up. So it was up by 7.4% yesterday, almost 2% a day as well. That's massive moves, but it's only just over the 50-day moving average. Which is at 10,902. The 200-day average is still well below that. Now, if you want actual positive confirmation, then you wait until that 50-day crosses the 200-day, and then you'll have some decent upside. But like I said, it'll be nowhere near the bottom, but you don't want that because you have fake rally. If you try and guess the bottom, you'll probably end up buying a fake rally, and it'll go lower. So it's hard to know. But just look at those trends. Yeah. Trend, man. Go with the trend. The trend is your friend. Yeah. Trend is your friend. And all that stuff, just saying. Yeah. By the way, you guys, remember a year ago, right? Pretty much a year ago, this week or next week, we were in the summer house doing a video.
Right.
Do you remember that?
Which? Yeah, the naughty one.
That's it. Yeah.
Okay. Yeah.
One. And then after that, we did a webinar one, for the share.
Right.
Yeah. I remember that.
I said a year ago, is 2022 the year crypto crashes? Do you remember that?
Right.
At a house of cards kind of thing. I said, I think it's going to be there. I said it's gone crazy, and I give an example of the hamster that was picking crypto and beating the S&P 500. And I remember Steve laughing at that. He said it was quite funny, and that showed you how mad the market was back then in crypto. It was going crazy. There were like pictures of apes selling for NFTs selling for £1 million at least. And you realise that is the top of the market looking back. You understand, when things get silly like that and people are paying silly money for so-called assets that aren't assets, they're just like, people are taking, basically, it's the height of risk. People take the biggest risks they can because the market's only ever gone up and they're not risk averse. And now, right now, we're the opposite. But at the top of the market, when people don't care, they're just chucking money at any old crap, like a hamster betting on NFTs. And I said there back then, a year ago today, this week, I said, this will be the house of cards. I said, you'll see all these crap little coins collapse, and then you'd get some, exchanges collapse. And did you see what happened this week? Have you seen what happens to Bitcoin? Have you seen that?
Yeah, it's just it collapsed.
Yeah, pretty much collapsed.
What's that now then?
It's gone from, it's now at 16,000. It
went down to 14, didn't it? I saw.
Yeah. So it went down to
still more than when I sold it.
Yeah. No, it's 14. It's £14,000 right now.
Yeah. But it went down to so the low it went down to was 15,500. But you have to understand, it was $65,000 in November 2021. In fact, a year ago, was it a week ago? Yeah. A year ago today, on 9th of November, it was at the high, and that was 64,000. And of course, did you see what happened with FTX, this exchange? It was like the biggest pond. I can't believe the amount of people, right, who are billionaires, celebrities, have all bought into crypto, And what's it based on? It's complete hype.
Yep.
Hype.
Yeah.
Isn't it? I mean, you see people like Matt Damon doing adverts on Crypto.com on telly, saying, dare to be different, and all this explorers, and giving this ridiculous. What was that advert he said? Fortune favours the brave. So he's walking through this museum with all these explorers, and he says Crypto.com. I thought, Fortune favours the brave. What? So basically, open up an account on Crypto.com, and you are like one of the explorers, discovered different, different countries years ago when climbing gear and walking gear was crap. That they were explorers. You open up an account on a crypto exchange is not you being brave in any way. It's you being a bit simple and just following the herd. Because it's like, what is it based on? Have you ever seen a Bitcoin? Have you ever done anything with it? What does it actually do? Store of value? Is it? It was 64,000
NFTs I don't get. Like, what's
I was just about to say that because a couple of people were talking to me about NFTs this week, and I was like, I still don't quite understand really the valuation of them and how you actually
no value, they're crap.
People in the tech world are like massively like hyped up about them. They reckon
not now.
Not
now, are they? No, not after they've all crashed. Did you see FTX? Sam, what's his name?
Yes.
Sam Bankman-Fried. He was regarded as also single-handed JP Morgan of the crypto world. He set up the second or third biggest crypto exchanges, Binance, of course, and Coinbase, and he set up this one. And it was nuts. He went to Sequoia Capital, who were like one of the biggest VC investors, very well known, as a good track record. He did a pitch to them, right? And they piled in a lot of money in it. Apparently, he was just talking nonsense. They didn't look at anything in it. And they piled in a lot of nonsense. He then, on leverage, off the money they invested on him, invested double back in them.
Wow.
And then he's now built this, it was worth something ridiculous like 300 million or something, 300 billion. Worth. What was he worth, Sam? But essentially, all of it basically built on leverage. It seems like most of the clients' money on this site, this exchange, was lent out, invested. So people's investments were lent out, invested, and of course, it's all come crashing down because when you're on leverage. Do you know how leverage works in any investment? And Warren Buffett always comes up with some cracking quotes, and he said, "Smart people don't need leverage. Dumb people shouldn't use it." I thought it's very clever, actually, because once you've got leverage, it's not your money, of course, and it's okay if the asset price is going in the right direction, because the money you owe on that, basically, Sam Bankman-Fried. So the money you owe on that, essentially, it's okay, it's going up, and you can pay off any margin. When it starts going down, the people who loan the money off say, by the way, that 50 billion we lent you, it's now worth like only 30 billion, but you haven't given us any money for that, so you need to give us some money. And you think, oh, hang on a second, I haven't got the bloody money, have I? I've just loaned it. And then there's a house of cards that start collapsing, and there's so many people involved in this. This is a big collapse. They've just filed for Chapter 11, bankruptcy. And he's one of the fastest bankers. It's gone from something. He's got the figures are ridiculous, but I want to see what he was worth. It's something like
32 billion.
Yeah, it's gone from. Is it gone 32
from 32 billion?
Okay, just repeat it again, Steve.
32 billion.
Yeah, gone down to nothing. So 10, 15 billion assets. Yeah. So literally in the last few days. And if you look at him, he looks a bit mad. Looking back now,
crazy haircut.
Yeah, he has got a crazy look. People thought he was a genius.
It's a Netflix season, or series waiting to happen, isn't it?
Who's the actor? The fat actor was in. He's good actually. He was in Wolf of Wall Street. Very good. Jonah Hill.
Yeah.
Someone said on Twitter.
Yes.
If this hasn't got Jonah Hill written all over it, I don't know what has. Jonah. Straight out in the ring.
Yeah.
And it is. It's like a phenomenal story of. And there's. Do you know what? Is it Tom? Who's the American football player who's married to Giselle?
Brady.
Tom Brady, yeah. He promoted it. Giselle promoted it. After their eyeballs in it, got paid in it. I think Steph Curry, amazing basketball players in it. There's loads of celebrities all in it. And you get billionaires coming on CNBC talking about crypto. And you think, I'm there thinking, but if you get enough people believing it and promoting it, almost just the herd just follows, But I just thought, where's the value in it?
Guy, isn't it? Isn't it? Surely if a footballer starts talking about it, that's the shoe shine guy. Yeah, get out. It's time to get out.
But we're now in a situation. I think this hasn't finished yet. Whoa, wait.
Sorry.
What did you catch it, Steve? Did a Formula 1 car go through your living room then, Steve? Slow down! Slow down! I'm doing a podcast!
Sounded like a sneeze my end, but there we go.
Sneeze your end. Yeah.
Which end?
No. But let me say, I think this is the start of the fall for Bitcoin. I think it's going a lot lower because even though I don't think Bitcoin is a problem, I think it's an amazing sort of idea, and it's never been hacked. Bitcoin has never been hacked as a system. It's very clever. You've got this house of cards situation where you have all these crap little tokens and all these exchanges that are built on leverage collapsing, and they're all interlocked. There's so many people on leverage in crypto world that I think there's going to be contagion, and it's just going to go further. And so I always have alerts on stocks, and like Bitcoin for a long time, I was surprised how it held up quite well, right? I mean, it has fallen by 75%, yes, during the bear market. But when you think of it as like an asset you can't do anything with, it's like, it's literally quite useless because taking away the store of value, because now it's not a store of value. If you hadn't bought it, pretty much pre-2020, it's not a store of value for you. You lost money on it. So taking away that, what else can it do? Not a lot. And you've got people like, this Michael Saylor, I've talked about before. He's leveraged his entire company onto Bitcoin. You've got El Salvador, the guy in this tin pot country, basically using public finances to buy Bitcoin. His average is about $36,000, and he's put billions into it. I think this is absolutely insane. It's insane. But I think now you can get many other things, interconnected here, collapsing on leverage, and it can only take Bitcoin down. But I see Mike Novogratz, a billionaire, come on CNBC talking about crypto for a long time. And I kept thinking, I don't understand it. People say, well, it's the future. Is it? Is it? Is it the future? How do you know that?
It's part of the future, but who knows how big it's actually going to be.
But how do you know? But no one knows the future. That's it. People just there's these people who just almost blind to it. Just say it's the future, like they know the future. Now you don't know the future, so basically you are deluded by saying that. You can't say it may be part of the future. Just these, but we already had payments, electronic payment systems. What is it replacing? I don't understand. Do you? Or it's decentralised? I don't care about that bit. I want to know if I'm paying somebody, how quick is it? Can I handle the transaction? Most crypto coins can't. They can't do the amount.
And also, I don't want to be owning money, which is going to constantly be worrying whether it's going to go up and down in value all the time. Exactly. I want something which stays at one value, to be honest.
Yeah, so it's not a store of value.
Relatively speaking.
It's not a store of value. It can't be a currency because essentially you pay for something now and it turns out you've spent overpaid for it because the share price has dropped by, you buy a pizza with one Bitcoin now and the Bitcoin price drops. You realise, I just paid a lot of money.
That's expensive pizza.
Yeah, or whatever. So you can't do taxi fares and so that in third world countries because you have no idea what the fare is. If we got compared to the US dollar, which is still the strongest currency, it's just. So what is it? I don't understand what it's for apart from trading. That's it. Yeah. Let's just be honest about it. Is it?
Yeah. Imagine a pizza costing $15,000.
Well, exactly. I think now isn't it the first ever burger bought or was a pizza? It was pizza. Google it. But the first ever transaction was pizza, and now that pizza's worth, because it's gone up a lot in value, that the Bitcoin you paid for that pizza would have been worth £30,000 now. So a slice of pizza. So that's the kind of thing that can happen, So yeah, but that so I think there's more problems ahead, and I just think people who are in that and just believe it's the future because they just believe it's the future are highly deluded. I can't see any intrinsic value there whatsoever. And I just keep saying, when you have stocks and when you have proper companies that are generating profit, you can value those companies based on that profit and multiple that profit, depending what sector they're in, depending where we are in bear market. But essentially, you say, should be 5 times earnings, 10 times, 20 times earnings, depending on the growth. Now, with Bitcoin, all you have is hope. Now, when that goes, that's it. It'll collapse, especially when you have companies being liquidated and all these exchanges. So it's based on hope, hype, and potential only, nothing else.
Yeah.
And that's it. Anyway, there we are. What do you think about? I don't know if you have you seen anything different? You don't go on Twitter, do you, Steve? But I've noticed that Twitter. I think there's something wrong with it. It's like literally, I'm getting no. Maybe I'm very unpopular now, but I'm getting no reaction whatsoever on there. Just really gone. It's nuts. Nothing. It's like hardly anything. I don't know what's going on.
Elon done something, is he?
Yeah. I don't know. Have you seen it at the moment? Have you seen what's happening? People are getting verified. It's like someone just said, I've just been followed by George Washington, and he's verified. George Washington, the first president of America. People are getting verified left, right, and centre. I was like, what's going on? He's apparently the the Verge, is it? A tech sort of online thing.
Yeah.
Asked for comment from Twitter about the layings off. He's laid off half the staff, and now another 1,000 people are gone. And they asked for comment from Twitter, and they said, "Oh, you can't have a comment because Elon sacked the communications, media, and marketing person." If you want to comment, try and get Elon's attention on Twitter. I don't know what's going on. He's now dropped this verification thing because everyone's getting verified or not. And did you see at the start that
he's not going to charge for it now?
Well, I don't know what's going on. He just said it originally. I we saw is it Trevor Noah? He said Twitter's melting down. And it's it's the best place I've ever seen. It's the best I've ever seen it. And he said, because essentially, Elon Musk came on and said, right, we're going to have some fun now, guys. Twitter's open and free now. Okay, you can have a bit of fun now. Sense of humour's not banned anymore. Okay, we're all going to have a bit of fun. And then people started copying Elon Musk's Twitter account and started tweeting out everything. And one of them managed to get verified. In fact, real Tesla got verified, which wasn't like even Tesla. And so saying, we're giving away some free cars. And Elon Musk said, no, hang on, I said parody accounts, no, that's not allowed. If you're going to have parody, you can have the word parody in the title afterwards. So hang on, Elon, what's happened to the fun?
How long before Elon takes his ball home?
I know, it is like that. And it's literally getting out of hand. And he's just asking, he's crowdsourcing ideas at the moment. And he said, no, I'm not going to do that. So at one point, there was like a point where there was the blue tick or the white tick in a blue circle verified. Then below that, in a greyed out sort of little thing, is verified as well. So what's going on here? So if you pay for the verified, you get the blue tick. But if you're actually verified before you pay, you just got that verified below, so you won't need to pay for the tick. And I thought, how far can you take this? Maybe if you pay more than $8 a month, say $16, you get 2 ticks. Or if you pay 24, you get 3 ticks. And it's like one of those sort of almost North Korean generals with medals all over him. Thinking, yes, look how many ticks I've got, boys. I must be very important. I pay $1,000 a month for this. So it's just gone nuts. And I think something's gone wrong with it. Absolutely gone wrong with it. It's nuts. Anyway.
Incredible.
Yeah. Anything else worth chatting about? Oh, by the way, did you see a Mancock in the jungle?
I haven't. I saw a little bit on, I don't know, on Twitter probably. But yeah.
Have you seen that, Steve? Have you seen Mancock on there, Steve?
No, I'm a couple of days behind on it. So I've been away, haven't I? So.
Oh, yeah. Well, he's one of these guys. I'm not sure if he's from a private school. But he's one of these guys that's so reassured in himself that he's highly deluded, I mean, do you see the bit where he said, I don't think I'm afraid of anything, squirrels, snakes or spiders, but we'll find out. We'll find out. He's laughing his head off and nothing. What's so funny, man?
Yeah.
But and then Bubba Kunde, there's a good guy in there. I don't know if he's a comedian or what, a celebrity. Oh, what's that, Steve?
What?
Steve, you got a lady in your house?
No. Yeah.
Who's that?
No.
I know, he was very worried there, wasn't he? No, I haven't got a lady in the house. No.
No. She was just leaving.
There's definitely no lady in the house. Definitely no lady in the house.
Not now, she's just left.
Yeah. So, Steve, I'm leaving. All you do is talking on that phone. And I think Formula 1 cars drive through you. But anyway,
where's my money?
Yeah, but oddly, that this comedian said to him, Matt, what's it been like? And Matt said, well, it's been tough, it's been quite tough. And this comedian said, well, because you messed up, didn't you? And Matt went, yeah, I messed up, so I fessed up. And that's what he said straight away. And you realise that people reckon he's written some lines down, look cool.
Yeah.
I messed up, so I fessed up, And he said, no, but...
What does that even mean?
I know. So, well, he messed up on the NHS and the COVID, so he fessed up, he said. And he basically resigned.
He confessed.
Yeah.
Oh, right, fessed up, confessed.
You're not down with the kids, Steve. That's, fessed up, man. I think he said to this guy, yeah, I messed up, so I fessed up, bro. I think he said to me.
Bro.
Yeah, bro. Whatever he said. And then it was odd, because he said something like, the comedian guy said... yeah, but you were... He said, well, I fell in love. That's the trouble, Matt said. I fell in love, that's the thing. I fell in love. And he said, yeah, if you fell in love, you're all over a booty, weren't you? and he went, oh, give over. I thought, what? Who says that, give over? It's like a carry-on film, isn't it? Oh, give over. But, you should watch the clips of that. It's a bit mad. But, I just don't realise. He did say, I want people to see that, politicians are human. we understand you're human, but doesn't mean you're likeable. Does it? I mean, to me, what you've done is the wrong thing. Going in there when you're supposed to be... It's almost like he's in there laughing and having a joke when he should be doing a job. It's like someone going on a jolly and knowing they're being paid, but going on a jolly, And then, Matt, you got a job to do, and you're taking 400 grand, and you're literally trying to raise your profile. Now, what do you want to be, a celebrity or an MP? Well, I suspect he wants to be a celebrity, isn't he? But there we are.
Yeah.
Not a very good one.
No, exactly. Any TV, boys? You been watching anything good? Anything good?
The Good Nurse on Netflix. That's quite good.
I saw that. It didn't really catch my fancy.
Last thing you want to do is catch your fancy, Steve.
Yeah. Okay. So I'm sorry it didn't catch your fancy.
Yeah. No, last time I caught my fancy was my zip. I done that once. It was really painful.
I thought The Good Nurse would catch your fancy, but
yeah, she'd catch your fancy.
Okay.
Oh, excuse me, nurse. Yeah, in fact, that's something you take to the nurse, isn't it? Yes, I've caught my fancy. Oh, let's have a look then. Yes, I've caught my fancy, nurse.
Are you a good nurse?
Yes, I'm a good nurse. Oh, good, because I've caught my fancy. Can you have a look at it for me? But I tell you what's worthwhile. Steve, a long time back, you recommended something. And I must have been half drunk. I watched the first episode, half of it, and thought, this is rubbish. But I'm watching now with Meg. In fact, she's annoying. She's gone to Essex and she's watched Ahead. I hate that. I'm watching it again and she's watching Ahead. Anyway, it's called The Gangs of London. Have you been watching that, Steve?
Yeah.
That's good, isn't it? I didn't realise... I don't know what it was. I found it really cheesy the first half an hour. But I watched it again, and it hasn't come across as cheesy. It is a little bit, but it's good, though. The fight scenes are very well done.
A third season, yeah?
Yeah, I think so, yeah. It's good, though.
No, they started on the 4th season.
Well, no, they just brought season 2, haven't they? I haven't actually watched that yet.
But, yeah.
It's on Netflix.
I don't think, it's on, I think it's on Sky Atlantic, man.
Yeah.
Sky Atlantic. It's made halfway across. I don't know why they call it that, to try to make it cool. But, yeah, Sky Atlantic. Check it out. A Gangs of London, man. And it's violent, but the fight scenes are good. Elliot, amazing fighter he is, isn't he? But he did get beaten at one point, which is something else I'll jump in. But I know, worth watching that.
One of the producers is from South Wales, actually.
Oh, yeah, who is it?
Gareth Evans.
That's right. That's why there's a Welsh element in there, isn't there?
Yeah.
I think there's some...
Are you sure Gareth Evans is Welsh?
yeah. It's funny, isn't it? Okay. It's funny of appearance like that. Sort of, right, his name's Evans. If people don't know, or somebody is not Welsh enough, Evans, is it? It'd be better if he don't. But just to make sure it's called Gareth. I didn't realise Gareth was quite a Welsh name.
Is Gareth a Welsh name?
Yeah, I didn't realise it, Steve. Right, and when I went travelling years ago as a kid, maybe 20 or something. I got some work in Cannes, just building the TV show festival, and this Manc kept saying, "All right, Gareth, how are you, Gareth?" And I said, "Oh, look, Gareth, I'm Justin. Do you mind if I call you Gareth because you're Welsh?" It really got my bloody nerves. It got my bloody nerves. I don't know. I couldn't laugh at it after a while. I got my nerves. All right, Gareth, fucking piss off. And I didn't know.
Have a sense of humour.
I know, yeah. So I did laugh at first. I did laugh.
He's called Gareth now.
I did laugh at the first few times, but it just got my nerves out of while. But I felt the meaning of it. Just called me. It's not my name. And I could have been a bit more lighter, and I just laughed along. But then it just got my nerves. All right, Gareth. And he put a Welsh accent on. Gareth. I said, well, I didn't know the stars. Why are you calling me Gareth? He said, everyone from Wales is called Gareth, and they. I said, are they? And I didn't notice that, but yeah, Gareth Edwards.
Do you know what? It's just fascinating. Like, I was filming the other day, and some guy, it was like a dad, he came up to me, who obviously got quite a big rig, and he was like,
hey, that's how you caught your fancy.
Obviously, I've got a big rig.
Childish. And he came over, you can see he's coming over like a smug smile. I was like, oh, what's he going to say? And he's like, oh, did you get that in curries? And I just looked at him and went, no. I got it in CVP.
Yeah.
Like, which is where I bought it from.
I know.
And he was just looked at me, he's like, oh.
I know, sometimes, people
and you're like,
say...
that wasn't even a joke. That wasn't even funny. I didn't understand what you were trying to achieve there. And I was like...
I know, but sometimes, people say things, and, we should just smile and laugh, but it just I didn't find the Gareth thing funny. You didn't find the Carrie thing funny, you know. It just got my nerves. You're probably saying I've got a big rig actually. Yeah. You know, I'm quite often catching my fancy in it. But yes, you
Welsh boys are quite sensitive, aren't you? I didn't realise. You're quite touchy about it.
Especially when you talk about our rigs, our names. Yeah. Don't mess with my rig. The size of my rig, fella. All right.
Yeah, Gareth.
Yeah. Oh, look at Gareth's rig. Oh, you got a massive rig, Gareth has. Look at it. Oh, I've got quite a big rig.
That's my fancy.
Yeah, that's okay. That's the code of the podcast. That's the code of the podcast. I've got quite a big rig, Steve Martin. All right, boys, that's enough. My internet seems to have crashed. I don't know what that is. Anyway, there we are.
No, bye-bye.
Bye-bye. Speaking next weeky.
Bye.
Oh, that's good and fancy.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.